very good evening to you on the business desk. At this hour, the South African Reserve Bank has reiterated remaining risks to the economy, while the central bank has cut the interest rate by 25 basis points to 7.25% due to lower inflation. It has revised its economic growth outlook to 1.2%, citing global uncertainty. Reserve Bank Governor Lesetja Kganyago explains.
We do not yet have the official data for growth in the first quarter. However, the indicators for sectors like mining and manufacturing have been disappointing, and unemployment has risen. In our last meeting, we warned of downside risks to our growth forecasts. We have now trimmed our GDP projections and expect growth of 1.2% this year, rising to 1.8% by 2027. The outlook for structural reforms remains positive, but there are also headwinds like lower global growth.
Kganyago has also highlighted the combination of higher trade barriers and elevated uncertainty to the world economy, as well as inflation.
We have revised down our inflation forecasts. This reflects the lower starting point, as well as a stronger exchange rate assumption and lower world oil prices. These factors offset pressure on fuel costs from the higher fuel levy announced in the budget. In addition, our previous forecast included VAT increases, which have since been cancelled. We see balanced risks to this forecast.
For more reaction from industry role players, we speak to WeBuyCars CEO Faan van Walt, who joins us virtually. Thank you so much for your time, Faan. As you heard there, the Reserve Bank Governor speaking about the impact that the fuel levy is going to have on the overall inflation. Of course, we heard about that from the revised 2025 budget. What's your take and reaction on the latest Monetary Policy Committee outcomes?
Good day to Ms. Vani. Yes, obviously we welcome any lower interest rate, so we're absolutely elated and happy with that because it sends a positive message to the market out there. Let's hope we can continue in this trajectory because consumer sentiment is what it's all about.
Some analysts have described this 25 basis point cut as an unexpected, welcomed surprise for the motor industry. I'm interested in finding out the near-term outlook where sentiment and maybe buying confidence is concerned, given that this is the first since January that the repo rate has gone down, and maybe the trends that you had already started seeing following a stay, but that stay, of course, came with the easing of monetary policy prior to the beginning of 2025.
Yes, from the industry, we're very happy. Any lowering in the interest rate has a significant impact on the sentiment the customers have because most vehicle owners borrow money to afford their vehicles, and when interest rates go up, it becomes less affordable. So when you do the math, it's not a huge difference. I mean, for someone owing 500,000 Rand on a vehicle, today's interest rate cut will mean a 60 Rand difference, more or less, on your monthly premium. So it's more a sentiment thing than a real difference. But over the last, since September, we've seen 4 cuts, which is 1%, and now it becomes quite significant in the consumers' lives.
It is far easier on our pockets as consumers, but are you also seeing in the vehicle sales industry that entrants are now coming in with a bit more spunk, in that there is far more in terms of wanting to buy? And there I want to ask you as an industry role player whether it's a good time to buy. I know some consumers have left it for a little bit longer just to see the trajectory of the repo rate.
Yeah, so far this year, it's a great story. New vehicle sales is up nearly 12% year on year, which is fantastic because we need new vehicles to flow into the car pool and stimulate the industry. So that's happening. And most of the action is happening in the more affordable price ranges because consumers are very cautious about installments as well as fuel consumption. So they opt for many of these new entrants into the market coming from Asia, especially China. We see new makes nearly every day arriving in the country, and it just sparks interest. And these vehicles, are very affordable and make a really good case in the industry. So they're giving certain traditional players a real good go for their money.
It is an interesting dynamic to watch in the South African landscape. You touched on affordability, and on that particular one, I'd like to get your views on the second-hand or pre-loved vehicle market. Are we seeing that with the ease in interest rates, that market is set to grow even further, as of course it was exceeding the new car sales market?
Yeah, it remains resilient. So far this year, it's been flat year on year when we look at used vehicle registrations, which is a good thing considering the pressure the consumer is under. So with another interest rate cut, we can expect more action there. But yes, the used car industry is really doing well. There are certain players who's under pressure, especially dealerships playing in that higher end bracket where it just becomes more difficult to afford those vehicles.
Thank you so much for your input. WeBuyCars CEO Faan van der Walt adding to the reaction on the latest monetary policy decision. Of course, it is that 25 basis point repo rate cut announced earlier this afternoon.